Hey guys, how you doing? It's Deepak Shukla here from Pearl Lemon Crypto, and I want to talk about today the, of course, imminent fallout from the Trump tariffs and really what it means for crypto fundamentally based on my understanding of the market. So feel free to join our Telegram group if you're looking for alpha when it comes to coins to trade or get in early into, as well as obviously anything that relates to crypto consulting in general. So Trump I'm in Italy right now, Central European time. So basically, Trump announced reciprocal tariffs, as he considers them, going from 10 to 49% on countries that ultimately impose heavy tariffs or barriers on US goods. So I think the UK is something at around 13%. I think China maybe is up at 54%. I think that Taiwan's up at around the 34% mark. So there's a whole slew of fundamentally tariffs that Trump has announced. A 25% tariff, I think, on foreign-made automobiles. That kicks in around, I believe, midnight. There's going to be ultimately pretty much a 10% blanket tariff on all imports. And a lot of people frame this speech as the speech that he made yesterday as a declaration of economic independence. There's almost a heavy nationalistic tone to it, if you will. And Trump cited, trade imbalances, IP theft, VAT discrimination, pollution havens, all of these elements as justifications fundamentally. Now, the US trade deficit's been, I think it's reportedly at 1.2 trillion, and the goal of Trump with this is to basically reverse that with this policy shift effectively. And I think some of the examples that you gave, I've got a list there actually. 700% rice tariffs in Japan, 300% dairy tariffs from Canada, 67% total trade barriers from China. And the promise is that this will bring back ultimately jobs and factories and reduce reliance upon imports. So the markets of course see this. You can just look at this dump it's taken as a deglobalization signal. It's a move towards a fragmented, destabilized market, and yeah, let's just go through some of the, of course, initial reactions to it then. So, as we can see here with BTC, it did crash from 88k, I think it was, to 83k within minutes of the tariff confirmation. So there's just been massive volatile red spikes that you can see across all of them, with only USDC, Tron, and a couple of others seeming to have remained stable. Stocks like, I believe, Coinbase, MicroStrategy with Thaler, they sold off sharply because, of course, the correlation with BTC continues to intensify because of the amount of assets that they have, they're under management, and then risk assets basically dumped broadly as traders are just shifting into fundamentally defensive mode. This is the classic risk-off reaction. So the tariffs will create inflation fears. There's going to be delay in Fed rate cuts, and there's going to be potentially no quantitative easing, at least in sight, until 2027, 2028. And Trump's trying to force a governmental hand by having interest rates fundamentally reduced, and this is one way to go about it. So look, at the moment, if we look at BTC fundamentally, let's just dive into BTC and see what we see. So look, BTC's let me get this out of the way. I don't know if you guys can see this Loom recording piece, but as you can see, this is just of course CoinGecko, but BTC is currently testing key support levels. It went down as far as 82k, but it's testing a key support level 83 to 84k. A close below 82.5. It kind of confirms quite a decent amount of bearish momentum. If we just take a look at candlestick chart and then take a look at it over a 7-day period, you can just see the size of the dumps is beginning to be a bit of a retracement right now, which is good, and we're seeing that across pretty much all of these types of assets, which is good to see. And then if we continue to just go down the line, I think that altcoins fundamentally are getting crushed harder than BTC is. So yeah, if we just you can just look across the board and see the last 24 hours there's been significant volume dips with Solana, something that I'm actually heavy on, has been crushed. And I think that at the moment what we can clearly see is that stablecoin dominance is increasing, because that's a sign of course fear, reduced risk of appetite, options flows that are beginning to turn bearish as well. There's aggressive puts that we're seeing now on BTC as well as ETH, and fundamentally DEX volumes are rising quite significantly because ultimately people are just getting out effectively. So they're just exiting on centralized platforms. So it's not a surprise that we're seeing huge volume in DEX as people get out of it. So in terms of predictions, thinking about the next 24 to 48 hours, I'd say that let's call it a smart money strategy. Institutions will likely be sidelined, just waiting. Clarity on tariff policy, economic reactions. Retail, people like you and I, or institutions may well, overreact. Probably less likely overreacting, but that opens the door for high conviction swing trades with favourable risk reward ratios. So one of the things that I've done, for example, is to go long on Solana because I think that it will retrace to a decent degree. It did spike as high as, for example, 136 yesterday, and it's now gone down to, as you can see, at the 1182, and I'm hoping for a return back to a midpoint around 125 over the next couple of days. So it's something that to look out for, and areas to look out for are perps, perpetuals trading, options flow, stablecoin inflows and outflows. Watch closely to begin to spot ultimately any early reversals, and with weekend liquidity being thin, you could potentially expect some more whale manipulation and potential stop hunts as well there. Look, I think in some interesting news, PayPal basically has added Sol and Link to its crypto lineup, which is a big thing. So if we talk about Solana specifically, then we'll do a separate video on talking about Solana in general. But these are some of the announcements ultimately in terms of what's happening right now. So we'll wrap up with some general comments. Trump in his speech referenced pre-Fed America, which was I think 1789 to 1913, and that was a tariff-driven golden age. So it's quite a big an economic pivot basically. And the idea of tariffs and protectionism has been sold as an economic revival strategy, but of course a risk is stagflation. And with election season coming up, I think Trump is doubling down on an anti-globalist rhetoric fundamentally, by making Americans nationalistic and proud again. And if this becomes ultimately a broader trade war, which doesn't seem impossible, then what you can expect to see from that is ultimately it's going to be a net negative for markets all around. And I've just seen a bug on my table, which I'm going to get rid of now. So there you go. Finally, I think that there's narrative tailwinds like Solana and PayPal are bullish long term, but they're not going to really protect you from kind of macro fear. So I think that general volatility is an opportunity, but don't YOLO too long until support holds and macro stabilizes. So I've taken, for example, a risk with Solana, but that's not a risk that would be for everybody, because it's important to think in zones and not levels and manage risk aggressively right now. So they're the comments, and these are the insights from what's happened with Trump. I think that there's some fundamentals within obviously crypto that are important to consider. Crypto is becoming an institutional asset now, which is the huge thing. The PayPal is evidence of that. Companies aggressively investing in Bitcoin. The ETFs being set up is evidence of that. BlackRock, I think, set up an ETF. So the macro is that crypto is in many respects more stable than ever, which presents good opportunities to get in, and it can be considered to be a form of digital gold in this time when the currency, the US dollar, has been massively destabilized anyway in any event. So stable coins are pegged largely against the US dollar, but the US dollar has been destabilized itself. So there's still lots of good things to have or hold within crypto, but right now is a time to just hold tight and watch its space.